ladies and gentlemen, it has begun. Just as I thought, the producer price index was much higher than expected in March. As I've been warning, high inflation is coming. The labor of Bureau Statistics websites crashed and delayed this data coming out, which seems very suspicious because the numbers were double than what they expected. Everyone, I've been warning you that this is coming. People just thought the money printing would go on forever and there would be no consequences. But guess what? Economics 101 doesn't lie, and this time is not different. Modern monetary theory is just that, a theory. And you can't just take on as much debt and print as much money as you can without consequences. And this comes just as yesterday, the Federal Reserve admits higher inflation is going to be coming, and he says if it does come, he's going to hike interest rates.
That's what we think. We think that there will be upward pressure on prices, which may be passed along to consumers in the form of price increases. We think that that effect will be temporary. Now, let me say that there's no certainty in this, and if it turned out that inflation, and particularly inflation expectations, were to move up materially in a way that suggested that that they were being de-anchored and that inflation might move persistently well above 2%, we would react. Of course, that would be our job. One of our two mandates is price stability. The other is maximum employment. We don't think that's the most likely outcome, but we do have the tools to deal with that outcome. We will use them to guide inflation back to 2%. If the need arises, but in the most likely case, this period will show temporarily higher prices, but not persistent inflation.
What would you do? You would raise interest rates?
That's the principal tool we have is with inflation. Yes, the traditional tool is to restrain the economy and reduce inflation that way.
Everyone, get ready. Let's get into the data right now. Have a listen to this. US producer inflation heats up in March as prices increase broadly. US producer prices increased more than expected in March, resulting in the largest annual gain in 9.5 years, and likely marking the start of higher inflation as the economy reopens amid an improved public health environment and massive government aid. Everyone, it's right here in black and white. High inflation is coming. Get ready. It's time to prepare, and at the end of this video, I'll tell you how to prepare. Okay, have a listen to this. The producer price index for final demand jumped, guess what? 1% last month as costs increase across the board. And guess what that is annualized? That's 12%. The PPI rose 0.5% in February, and in the last 12 months, through to March, the PPI surged 4.2%, the biggest year-on-year rise since September 2011. And guess what? This number is double what they expected. Economists rolled by Reuters had forecast the PPI would increase just 0.5% in March and jump 3.8% year on year. But it's double that, because I know, and you all know, everybody here on YouTube knows that inflation is much higher than they're reporting, and it's finally showing in the data. But guess what? The data is normally conservative, so I'm sure it's much higher than this. And you may think just a 1% increase, that's not that much, but that's month on month. And that's 12% annualized, and it's increasing rapidly every month. And once the inflation genie comes out of the bottle, it's very hard to stop. Everyone, they're devaluing your money into the ground, and inflation is theft. It's just another hidden tax because the government can't repay the debt, they can't afford the debt, and they're trying to inflate away the debt. People think, oh, it's great, my house is going up, I'm gonna be rich. Well, guess what? If inflation keeps going at this rate, your food bill's gonna skyrocket, your property tax is going to skyrocket, your insurance is going to skyrocket, your energy bills are going to skyrocket, and you may not be able to afford your house anymore. So this is not a good thing like people are thinking. People are thinking, oh, my stock price is going up, my Tesla stock's going up, yeah, I'm kicking goals. But really, this only benefits those that have multiple properties and those that have millions and millions of dollars invested in the stock market. It doesn't benefit the average Joe at all, and this is going to destroy the middle class. But that's not all. Listen to this. Good prices soared 1.7%, accounting for almost 60% of the increase in the PPI last month. And just to show you some context, that was the biggest increase since December 2009. The last financial crisis. History doesn't always repeat, but like I said, it often rhymes. But alarm bells are going off in my head. Things are sounding exactly like what happened before the last financial crisis. And this is what people call a bull trap. Everything's rebounding, everything's booming, it seems great, but it's a trap, and there could be a W-shaped recovery about to happen. And people thinking, oh, it's so good, they gave us stimulus checks, they're giving us all this free money, this is great. Everyone, stimulus checks and lowering interest rates, it doesn't fix any of the fundamental issues. This economy, this stock market, this housing market is unsustainable, and natural forces are trying to make it correct, but they keep on manipulating the market. It's no longer a free market anymore, and they don't want to let it correct. And you may think this is good if you own a house or stocks, but as an investor, that's actually bad, because corrections and crashes create good buying opportunities, and it gives opportunities for the younger generation to get into the housing market and to get stocks at good values in the stock market and create wealth. And like I've been saying, the Federal Reserve, the Reserve Bank of Australia, they've been lying to your face. They've been saying all this money printing won't cause inflation. They've been saying, come on guys, take on as much debt as you can. Interest rates are low. It's free money. Come on, take it all. Leverage to the max. And everyone's like, oh, interest rates aren't going to rise. Okay, I'll take on as much debt as I can. And then bam, inflation comes. Bam, interest rate hikes. And there's going to be huge consequences. And listen to this is very important. Some economists do not share Powell's inflation assessment, arguing that businesses have the capacity to pass on higher production costs to consumers. Business surveys have indicated that consumer inventories are at record lows and order books are full. And this is what I've been saying. They're saying, oh, look, we're going to tax the rich. We're going to tax all these businesses and increase corporate taxes. This is great. We're going to create all this revenue to give you money. But guess what that's going to do? All these businesses, all they'll do is pass on the costs to you. They'll increase their prices, and the cost of living will just become more and more unbearable. Look at the 10 cities in California. Look at the 10 cities in all the major cities in the world. Do you think it's working what they're doing? Do you think it's good? Do you think it's moral? It's absolutely not. But don't worry, you own nothing and be happy. And guys, as I was saying earlier in the video, listen to this. The PPI report was delayed after the Bureau of Labor Statistics websites crashed. What a coincidence. The BLS and Labor Department Statistics Agency said it was looking into the problem with the website. Guys, I've been saying they're panicking. We've been putting them under pressure. The people are waking up to what they're doing. They're waking up to the theft of inflation. They're waking up to how the central banks really work, and they're waking up to how this whole financial system is rigged to make the rich richer and destroy the middle class. And how convenient the Federal Reserve is now blaming all this high inflation on bottlenecks and supply chain issues. They're blaming it on the Suez Canal issue. And they keep on saying, don't worry everyone, this is just going to be temporary. Well, even if it was temporary, are you okay with your purchasing power being devalued by 15%? And say, for example, if inflation goes up annualized at a 12% rate, even if it drops to 3 to 4%, well now it's compounding at a higher rate and your wages aren't going up 3 to 4 or 10 or 15%, are they? And this also comes with the CPI data likely to be released on Tuesday, and that's likely to be 0.5%. But guess what? It was 0.3% in January. It was 0.4% in February. It's now likely to be 0.5%. And who knows, maybe it now be higher with this new information. And guess what that is annualized if it increases at 0.5%? 6%. That's 3 times the Federal Reserve's target of 2%. So they're going to have no choice but to hike interest rates, and all these first home buyers that are FOMOing in right now, all these young families are going to get destroyed. And listen to this everyone, this should send alarm bells in your head. Fed Vice Chair said on Friday, if expected jump in inflation did not reverse going into 2022, the US central bank will have to take that into account. And guess what? They always speak in riddles. They don't ever tell you it straight up. I'm going to dumb it down for you. If inflation keeps going up at this rate in 2022, we're going to hike interest rates. So everyone, even if the stock market and housing market doesn't crash in 2022, with inflation keeps going up at this rate, and if they don't do anything about it, in real terms, your house and your stock market will buy less and less goods, meaning it will be a silent crash that no one will see, but only my viewers here will know about it. But it is very likely that the Federal Reserve, if we keep putting them under the pump, if all of you keep sharing these videos, we can put them under pressure to act to stop this theft of inflation and to prevent the risk of hyperinflation. Like I said, they're going to have no choice but to hike interest rates late this year, early next year. And that could have a devastating effect on the housing market and stock market, because all it's going to take is interest rates going up just 2% and we're going to see mass defaults. Okay, so those are all the problems, and everyone's asking, well, what do we do, man? Now, it's very hard for me to say exactly what to do, because I can't give financial advice over YouTube, because everyone's personal situation is different. For young people, for older people, for middle-aged people, I would give them all a different strategy. It also depends on people's risk tolerance and investment time horizon. It also depends on how much capital you have, and it also depends on what expertise do you have. Are you an expert in real estate? Are you an expert in valuing undervalued stocks? Are you an expert in crypto? Are you an expert in precious metals? There's so many variables, so I can't give the exact thing to do to prepare for this. But all I can say is be aware, I'll keep you up to date, and if inflation keeps going up like this, historically, precious metals go up when inflation goes up. Bitcoin could act as a hedge against inflation. Some people don't agree with it. That's just my thoughts, just my opinion. I could be wrong. Farmland is skyrocketing because if food prices skyrocket, people are going to want to go out there and start growing their own food. And China and Bill Gates are buying up farmland like crazy. Also, defensive stocks like grocery stores and recovery stocks, they could perform well in a high inflationary environment as well. But just a warning, Venezuela had the best performing stock market in the world, but people can't afford to eat. Turkey has the best performing housing market, but the currency is crashing. So don't just look at the dollar amount of the S&P 500 going up. Don't just look at your house price going up 5%. Look at how much goods did my house buy me last year versus this year. How much did the S&P 500 buy last year compared to this year? So everyone, I urge you, do your research, don't throw into these markets right now, and be ready. For all my loyal viewers and subscribers still watching, you're awesome. I thought after publishing my last video I could finally get some sleep, but then I saw this. I want you all to be informed, I want you all to be ahead of the game, and I want to warn you early because in a few months it's going to be too late. Thank you all for watching. I'll pop up some of my other videos here. I'll see you there.